Welcome to Industry Focus. I'm Nick Sciple. This week, John Rosevear returns to the show for a look at what's going on with big auto. John, how's your summer been?
It's been great. I think you know, but our viewers may not know. I have 3 college kids, and they've been in and out all summer with friends and so forth, and it's been a fun time.
Yeah, very exciting. I've also been running around. You know, as folks know, I've gotten married. We've over the past year, John, we've talked a lot about electric vehicles and the future of automotive. There's been constant news. Really, like I said, for the past year or so. Today is no different. So just today, President Biden has announced that he's going to sign an executive order, which will put forward a new national target for zero emissions vehicles. Numbers being reported is up to 50% of cars sold in the USA by 2030, targeting to be these zero emissions vehicles. Where does this fit into this EV story we've been talking about for so long, John?
It's another step forward. I mean, I think we've already seen, if you look at the financials of companies like GM and Ford, they're already spending money on EVs. I mean, they've announced these big cash commitments, but you can see it in their R&D dollars and their CapEx dollars and so forth, that the money is getting spent. What they want, what they always want, is some assurance that buyers are going to show up for whatever it is the government wants them to build. And I mean, they are all three. Stellantis too now, which is the post-merger Fiat Chrysler and Peugeot. Stellantis is the third of the big three, although Stellantis is more global focused, but we'll get back to that. But anyway, what they always want is to know that there's a 3 to 4 year lead time developing new vehicles, sometimes longer when you're doing things like developing new drivetrains and new battery technology and so forth. They want to know that when they spend the money up front, 3-4 years later, buyers are going to show up to get them. So what they're hoping for from the government is some support around infrastructure. We need better charging networks in the United States. We need chargers in more places. We need more fast chargers, and so on and so forth. And also maybe with incentives. I mean, we saw how incentives helped Tesla get rolling back in the day. Maybe we extend those a little further. Maybe we position them around more entry-level vehicles or something like that, so that we know that buyers are going to have a little extra motivation to choose an electric over a hybrid or internal combustion vehicle in 5 years or whatever. When a lot of these come to market in the mid-decade, it's really about 3.5-4 years now, I guess. And that's what they're looking for. And of course, the Biden administration, the Democrats are happy to deliver that because they see, American jobs. China's rushing into EVs. Europe is increasingly rushing into EVs. We don't want to be left behind. We want Americans building them from a White House policy perspective. We want good paying jobs, union jobs with these 3 automakers, and we want American technology and American know-how and to be exporting these vehicles, not importing them. So it's good policy for Democrats, and it's helpful to have that for Detroit.
Yeah, and I think when you look at some of the moves other governments have made around electric vehicles, I think in particular Europe, we've seen this big upswing in EV production. A big part of that has been driven by the European Union saying, listen, if you don't produce more of these vehicles, we're going to start dinging you with fines, all those sorts of things. There's not that in place with this current executive order, but what do you think about what's going to push automakers past this target to really make the rubber hit the road, to use a pun?
Well, I think they want to do it anyway, but I think the stick that comes with this, the carrot is the government help with infrastructure and incentives and so forth. The stick, I think, will be announced, I think, later today. It might be tomorrow, but I've seen some floaters from the White House about this. A comprehensive revamp of fuel economy standards, emission standards. First of all, they're going back to the Obama era plan, which was adopted in like 2012 or 2013. Again, at the time with the buy-in of the Detroit automakers, that the Trump administration eased some. They're putting that back in place like right away. And then a couple years out, they're going to start to make things a lot tighter around fuel economy and emissions, basically to make it harder to keep selling internal combustion vehicles with higher capabilities and so forth. And at a moment where GM and Ford and Stellantis really don't want to be spending money developing new internal combustion engines and so forth.
Yeah, so you mentioned a few times, John, Ford, GM, Stellantis. This is this merged company, Fiat, Chrysler, Peugeot. So traditionally, we thought of the big 3 automakers. It was Ford, GM, Chrysler. This is still kind of Ford, GM, Chrysler, kind of standing up there with the president when he signs this executive order. One company you don't hear included in there, which is always in the conversation when it comes to American electric vehicles, is Tesla. What do you make of Tesla kind of being snubbed here?
I don't know for sure. You know, my guess is either they asked Tesla and Tesla said, nah, it's not our party, we're not interested. Or what I think is more likely is that, of course, Tesla is not only non-union, but they've had some fights with United Auto Workers, and Democratic administration, very pro-union, good at paying American jobs is the theme for the Biden team and so forth. I think maybe they didn't want, the non-union shop that's had fighting with Tesla to become, that's had fighting with the UAW to become the story here, when it's really about, good paying Midwestern blue collar jobs and swing states where we need them to get reelected and all this kind of, this sort of thing. It's a political calculation. Of course, the Tesla fans on Twitter are screaming about it. But again, Tesla is not the company that needs to hear, just partly because Tesla's built its own infrastructure to some extent, and it's already made the investments in electric vehicle technology, and just the huge sums of money that you're talking about with the major Detroit manufacturers. They need the reassurance that the government is going to support their effort to go electric, and so Tesla's also really not the target audience for this necessarily.
Right, Tesla's already doing the things. Tesla's already 100% EV, right? And the Biden has
this
they're
50%
already 100% EV target.
EV. They've built out their own charging network and so forth. I think everybody, including Tesla, would benefit from expanded access to fast chargers. Teslas can use them too. And, certainly in certain parts of the country, you hear of the big lines at supercharger stations and so forth. And it's a ongoing gripe of certain Tesla owners in some areas where, it seems like you have to wait an hour and a half to go to the charger. So they would benefit from this indirectly as well. And if there's an expansion of incentives, it's possible that, future Tesla buyers will receive those incentives as well. I don't know if they're going to cap it by the price of the vehicle or what. There was some talk of doing that, but even then, Tesla's talking about doing a model below the Model 3 at some point that would, presumably qualify, just like, the Ford and GM vehicles and Chrysler vehicles in that kind of space.
Yeah, so we'll see what happens. I think that it shouldn't take away from Tesla as a very significant player in U.S. EVs, and I don't think that that's going to change depending on whether they're standing behind the president when he signs his executive order. That said, it says something about at least from a political point of view, there's still a certain class of folks in Washington or maybe other places that think of the big three as one category, and then Tesla and some of these others in another category. Maybe one last thing on the presidential action. So 2030 targeting half of autos sold in the USA being electric vehicles. In your opinion, how realistic is this timeline? Like, does this heaven and earth have to be moved to achieve this, or is this kind of in line with kind of where we expect things to move anyway? What are your thoughts?
Heaven and earth has to be moved, but heaven and earth is already moving. I would say, assuming they can get the batteries, the automakers will have the cars, or at least the ability to build that many electric vehicles. We need the buyers to show up to really make it work. And that means we don't need a giant electric vehicle backlash between now and then, and so on and so forth. And, you could see where this could become a thing, only crazy liberal commies drive electric vehicles, this and that. But what I think is so significant about Ford's F-150 Lightning is it neatly diffuses that. Here is, the best-selling pickup truck, and we're making it electric, and that makes it better. It's important for Ford's business to get it out there soon, and I think it's also going to turn out to be a significant product in moving Americans to adopt electric vehicles.
Yeah, well, so maybe we can move on to Ford earnings. John, one of the other things we wanted to talk about today is we've seen Big Auto across the board report earnings over the past week and a half, 2 weeks. We'll talk about GM, we'll talk about Ford, BMW, maybe some others, but let's start here with Ford. Had a pretty positive response to earnings back in late July, has traded down a little bit since then. What were the big themes to pull out from Ford's earnings report?
Well, I mean, people were expecting a not so good quarter because Ford has been, and let's back up. To refresh our memory, there's an ongoing global shortage of semiconductors, computer chips, particularly the simpler, older style computer chips that autos are full of. that control little things. This is not, the latest cutting edge silicon in a new iPhone. This is older technology stuff that is still very useful, that automakers like because it's rugged and proven, and they know it'll last 10, 15 years in a car, which is a harsh environment. There's been a shortage of that kind of computer chips, and it has really disrupted production for a lot of automakers. Ford has been hit harder than some. They've had to cut a lot of production, which is really unfortunate given that they have a brand new version of their F-150 pickup that would be in very high demand if they could build them that fast, and so forth. So Wall Street was expecting a not very good quarter, perhaps even a loss. Ford came in with a profit on an adjusted EBIT basis, which is what we all watch. They made a profit of 1.1 billion versus a loss of 1.9 billion in the second quarter of 2020, when of course a lot of the factories had been shut down from COVID. Their margins were not quite as high as we'd like and so forth, but it was a respectable quarter, and it was, again, better than Wall Street expected. And the story there is that, yeah, we're not selling as many cars and trucks as we want, but that's true of everybody. There's a shortage. There's very high consumer demand. We're not offering very much in the way of incentives. We're getting full price for these, and that is doing great things for our margins.
Yeah, John. So this reminds me, I tweeted something out about this a few weeks ago. So I went with my then fiance, now wife. We have since been married to go get some repairs done on her car. And we were in the Honda dealership, and all across the dealership, they had in these little plastic display things, articles from like Car and Driver and things like that, talking about there's this big car shortage. And the translation is, listen, we got the cars that we have. We're going to sell them to you for the price that we name. And if you don't want it, good luck finding another one. It sounds like that's some of what you're describing here, John, is listen, the cars that are out there, people are going to have to pay what they have to pay.
Yeah, I mean, Ford is actually, I think this is a temporary situation because of the chip shortage, but they've actually lost pickup truck market share because GM has been able, for whatever reasons, with its suppliers to build somewhat more pickups and get them out there. But everybody is selling, cars, trucks, SUVs at full boat prices, if not markup prices, because I know some of the dealers are doing well off this. The automakers hate that, but the dealers are independent businesses. They can price things as they want. But where the automakers are saving money is they don't have to do the incentives. There are still incentives out there for a few things, but they're nothing like what we would expect to see in normal times, even normal growth economy kind of times. And that is putting a lot of points on margin.
Yeah. When demand is very strong relative to supply, you don't have to do a lot to sell what you have out there. So you mentioned, John, the F-150 Lightning, how this can be a really important product for Ford, maybe an important product for the image of electric vehicles in the U.S. What are we seeing as far as updates on the Lightning and Ford's EV plans?
Well, Ford said a couple weeks ago that they are actually scaling up their ability to build electric vehicles generally because the demand has actually taken them a bit by surprise. First for the Mach-E, which they launched, the Mustang Mach-E, the electric crossover that they launched at the beginning of the year. And also they now have, I think, 125,000 pre-orders and for the F-150 Lightning. And I mean, this is just put in a deposit. The deposit is refundable. But still, it's a strong indication of interest. What they found with the Mach-E was a lot of these $100 reservations converted and became sales, and so they are taking the conversion rate, which was very high, and looking at the F-150 and sort of trying to scale early production. They're saying, we're going to need more batteries, we're going to need more motors, this and that, and so they're pushing out to their suppliers to make sure they have that in place and ramping up their production capability and ramping up their volume expectations, assuming we get past the chip shortage, for this thing when it launches in the first half of next year.
Yeah. So, you mentioned the F-150 Lightning, that, 120,000 reservations. That's really significant. Why is this product, you mentioned more broadly, something that you think is important for EVs in general, or could be?
Because it's an F-150. The Ford's F-Series pickups are the best-selling vehicles in America. They're driven in red states. They're driven in blue states. Americans are ornery people, and we disagree on many things, but we like pickup trucks. Certainly, an awful lot of people do. And this is the pickup truck. It's the most visible pickup truck. And Ford is building, and Ford is bringing it in at a reasonable price. They are targeting commercial fleet customers who will see a real return on their investment or total cost of ownership that is considerably to their advantage versus maintaining an internal combustion fleet. Ford is making this case strongly to their fleet customers. I think in part because they weren't sure how retail demand was going to go, but they know they can, if they can, they put a lot of effort in selling these to fleets, certainly to get the scale early on if retail demand was a little slow to arrive. But I think they've been pleasantly surprised by the retail demand. They say a whole lot of these people are new to Ford, first-time Ford customers who are making reservations for their iconic F-150 pickup, and it's a good truck. The capabilities and so forth that they've shown so far are genuinely impressive. It is an F-150. We know that Ford will, beat the heck out of it before they ship it, so that they know it's durable, so that they know they can stand behind it. It's a product you can buy with some trust. If you've had F-150s and Ford says, okay, here's the electric F-150 and went through our same durability cycle that all our F-150s go through. We've tested it. We'll stand behind it with the full warranty. You know what you're getting. I think a lot of people are really liking that. And as I said, that's across America. That's not just, Teslas for elite tech people or whatever. It's, this is the everyman product, the every woman product, even to some. They do sell a fair number of them to women. I was actually surprised by that when I learned that a few years ago. It's a thing that reaches into all parts of the United States, including parts of the United States where we might expect, if Tesla was really out in front of this and so forth, a little bit of a backlash against, Mr. Rocket Ship or whatever. And so this, I think the F-150 is a key product to help move Americans to electric vehicles. And again, by prioritizing commercial deliveries early on and commercial sales early on, what you'll see is a lot of people driving them at work, and they come home and say, man, that's a nice truck. I'm going to get one. and they tell their friends, and so, you get a lot of word of mouth and second order effects off that. It's why I think it's such a pivotal product. To a lesser extent, also the electric transit van, which is coming this fall. That's another thing. They drive it at work and go, these Ford electrics are actually pretty solid. I mean, they're really rugged. We've been driving it 6 months. We've banged on it. Hasn't had any problems. And it's nice to drive. Maybe I want a Ford electric or, a GM electric or a Tesla or whatever. This spreads the adoption. It spreads the word. As people who have driven electric vehicles, we know that they're fun. And, even the mundane ones are fun. But most people still have not driven electric vehicles. And when you have them at work, when you're selling into commercial fleets in big volumes, you get more people behind the wheel of one and they say, whoa, I like this. I can live with this.
All right. Any last thoughts here on Ford, John, before we move on to GM?
One thing to note is that a lot of Ford's profit came from its financial services arm. And what's going on there is that as new cars have become harder to buy, used car prices have soared. We know that. We know that's a big component of when people say, oh, consumer price index is up in the United States, inflation is going on. We know a lot of that is cars, new and used vehicles, light vehicles. What Ford Credit is finding is that the vehicles they get back off lease are selling for very, very, very good prices at auction. So they had a record quarter, Ford Credit, Ford's financial services arm. That drove a lot of Ford's profit when we might have expected a loss in the second quarter.
Okay, John, let's move on to GM now. GM shares fell sharply after earnings, close to 9% by the end of the day. What did Wall Street see in the earnings that led to that move?
It's kind of an interesting question because I didn't I didn't know it was dropping. It's oh my God, they missed. But if you look at the underlying numbers, it was a good quarter. Revenue fell short. That was a clear miss, no matter which set of polls you looked at, whether it was Bloomberg or Thomson Reuters or whatever, some of the other ones we use. Revenue fell short, but that was just they ship fewer vehicles in the second quarter than we expected. They've got thousands and thousands of vehicles that are built, except for a couple of computer chips, sitting on lots, all through the Midwest. We see pictures of those all the time. I saw one lot today where they're putting 1,000 GM pickups a day into the lot out of one of their full-size pickup factories. And it's just huge rows and rows of trucks waiting for these chips to come through. and they can't record the revenue until they're actually shipped to dealers, until they're done. So there is that, and you say, okay, they missed on revenue, but that's reasonable. But their profitability was terrific. Bloomberg expected $2.23 a share. I think Reuters' estimate was considerably lower. It was an odd thing because there was some divergence there. I don't remember exactly where GM came in, but it was certainly better than I thought we would see. And
$1.97 is what I have here.
Yeah, $1.97. I think some people were looking around $1.50, and the profitability is really good here. Their margins were extremely strong. What we say with GM is EBIT adjusted. It's operating profit minus one-time items, which weren't significant this quarter. The 12% EBIT adjusted margin, that's big news in the auto business. That's a really strong margin. That's Mary Barra is keeping this thing on track. They're making good money. With GM, a lot of the story is pricing. They have been able to ship a somewhat higher percentage of their vehicles to dealers than perhaps Ford has, especially in North America. They are making some conquest sales, especially in trucks and SUVs in places where Ford dealers might be tapped out because they can get some Silverados to dealers or whatever. They had a very good result in North America, a good profit. And they too, with their financial services arm, also saw some of the same dynamic we talked about at Ford, where the used vehicles coming off lease are getting better returns at auction than they expected, so that fattens up their profit. GM Financial pre-tax profit, I think, was 1.6 billion, whereas they usually run around 300-400 million a quarter. That's very stout, and so forth. China is performing better for them, not back to where it was a couple years ago, but better than we have seen in the last few quarters. Again, in China, they've also got factories that are limited by chip shortages. We've even seen this with some of the Chinese automakers. The electric vehicle maker NIO, which I know a lot of our viewers follow, has had some of the same kind of chip-related disruption. But Mary Barra's got it on course. They were cautious with guidance. This was also true at a number of other automakers, simply because we aren't sure yet that the chip situation is going to get better, by the end of the year. A lot more capacity is coming online, but whether those chips land in September or in next January is still somewhat, a fluid situation. And I think we're going to see more detail and more clarity on expectations maybe over the next 60 days or so.
Yeah, the chip shortage thing is something affecting all these automakers to one extent or another, and it's something that's kind of out of their control, right? Until the supply chain, gets back operating, and we can account for those issues. That there's really not much they can do besides, as you mentioned, start parking the cars in the lots and waiting for them to have those modules to put in the vehicle. One line item,
but I do think, just to be clear, that's why the guidance was soft. Because they don't want to, they would rather under promise and over deliver. They'd rather have the upside surprise rather than to have to say, whoops, chips didn't come in time. We got caught out. We made 100,000 fewer trucks in the quarter than we expected, something like that. And so I think Wall Street was expecting more optimism around chip supplies, really is the story there. And it's not just a GM story, of course.
Yeah. One other line item in the GM earnings, you've seen lots of folks talking about this $1.3 billion in warranty recall costs, 800 million of which are attributed to the Bolt EV. EVs are something very much at the top of discussion, and GM was relatively early among the big automakers to move into electric vehicles with the Bolt. The GM's actually sold enough of the Bolt to where they no longer receive the federal incentive whenever you sell a GM electric vehicle. But what's behind this large warranty charge we're seeing related to the Bolt?
They discovered after investigating some fires and other issues that there were some a relatively small number, as I understand it, of battery cells made by their supplier, LG Chem, that may have had a flaw that may be causing some of these problems. So what they did was they recalled every Bolt that might have some of those cells in it, which was 2017 to 2019. I think, don't quote me, if you have a Bolt, check with your dealer to be sure. I don't want somebody thinking they're off the hook or they're under a recall if they're not. And they're going to replace battery packs. And that's expensive. Of course, it's expensive. GM emphasizes that this is not the latest battery technology in the Bolt. This is an earlier battery technology. It's also not their new Ultium cells, which will come online when the electric Hummer SUV starts shipping later in the year. But this is a problem where they've seen a problem, and GM has certainly learned its lesson over the last decade that if you've got a maybe problem, you jump on it right away, even if it's expensive, because if you don't, as we found with their ignition switch recalls several years ago, it'll get a lot more expensive if you don't. So it's them trying to get out in front of a little problem before it becomes a huge problem. It's expensive. It's also the right thing to do. Ultimate cost of the recall may not be nearly as high. If they find that, in fact, it was only a relatively small number of cars, they may be able to sort of hone down their understanding of which cars are likely to be affected. We'll see.
Yeah, and that this goes into that thing we talked about earlier of like, if there's not some backlash against EVs, like I don't think this is something that would make me concerned. There's a fire risk with EVs that you're concerned about owning one, but this is the type of thing that goes into this PR tapestry, and it's one of those things you'll hear folks talking about. GM has released some more details around their EV plans outside of the Bolt, what we could expect from the company moving into the future. What should we be watching there as far as GM's EV future?
We should be watching how the next few launches go. The Hummer EV is coming, GMC Hummer, they're calling it. And then in the first part of next year, I think it's first quarter, a Cadillac electric SUV called the Lyriq. And this is a direct Tesla competitor. It will have the Cadillac plush interior. Word is it's very quick. It's quite stylish looking. What I want to see is that those two launches go off very smoothly, because this is their new battery technology now, the Ultium battery technology coming out that we've been talking about for a year and a half, 2 years now. This is production. If these vehicles launch on time, if the production ramps, as our friend Mr. Musk likes to say, go as expected, if early reviews are good, if there are not big recalls or problems right away, that is bullish for GM's overall EV effort. We'll be watching that over the next 9 months or so. If there are snags, well, I'm not sure it's dire, but certainly it means that this is not going to go as smoothly as it should, and we will have to adjust our roadmaps accordingly. But that's the big thing to watch as they roll into their proprietary batteries, their proprietary battery packs, these much hyped new vehicles. Does everything go as planned? Same's true as Ford, really. The Mach-E launched pretty much as planned. There were some early snags in production, but for the most part, it came out pretty much as planned. The F-150 has to come out as planned.
Yeah, that whole it's another thing you hear Musk talk about is getting from prototype to scale is one of the most difficult things, and the auto industry is one of the among the most difficult manufacturing businesses there are out there. So we'll have to see how those things develop. So moving on from GM and Ford, these North American automakers, let's look at BMW in Germany. What's going on with BMW over there in Europe?
BMW had a really big, nearly $6 billion in dollars in operating profit versus a 700 million-ish loss a year ago. Of course, they were in Europe affected by COVID, and plants were shut down, much as they were here and in Asia and everywhere else. What BMW rather has going for it is that they've been able to get more chips than most of the others. They have good long-term relationships with their suppliers, and the way the dice have fell, whereas one of Ford's suppliers had a factory fire in Japan and this and that has exacerbated their situation. BMW has escaped that. Their suppliers have been able to do fairly well, so they've been able to build and ship more vehicles as a percentage of what they might have wanted to do in the second quarter than a lot of their rivals. And if you want the Cadillac, or you want the Acura or whatever, but the BMW dealer has stock on the on the lot, you're going to buy the BMW. And again, because there are shortages elsewhere, they've been able to get great prices, minimal incentives. And that's really what drove it. It's we've got cars people want at a time where cars are relatively scarce. We're getting good prices for them, and we're selling a lot of them. Their shipments were actually up from the second quarter of 2019 before the pandemic. So clearly they're at least temporarily gaining share because they're able to make and sell and ship the vehicles. And that's great. It was a happy quarter for them. They warn, of course, that just like everybody else, they're saying, we don't know if we're going to be hit worse by chip supplies in the second half of the year. Alternatively, if our competitors, if supplies ease across the industry, this feast will come to an end to some extent. So they were also somewhat moderate on guidance. But overall, it was an outstanding quarter for them.
Yeah, this is one of those times where the supply chain manager gets to shine. It's very rare that
Yes.
that becomes front and center, the star of the company, and seems that that's what's happening, at least to some extent in the case of BMW. BMW also, on the EV front, working on expanding EVs in Europe, which is a little bit different market. Maybe you can talk about that, John. But what's BMW doing on their EV initiatives?
Well, BMW is an interesting story because they kind of rushed into EVs in the early part of last decade. You remember the i3 and then the i8 hybrid sports car, which had this little 3-cylinder engine, but drove like a proper modern sports car and so forth. And some really interesting technologies, carbon fiber technologies and so forth. And then they shut it all down. There was a change of CEO. The board said, you're spending too much money and not making enough money, et cetera, et cetera. So they then had to come back a couple years ago and sort of reignite a lot of those programs. And because the board at BMW has been so conservative, they've had a little bit of a conservative strategy. We're going to try to build internal combustion, hybrid, and electric vehicles, all from the same architectures, all on the same assembly lines and so forth, because we don't know how the mixes are going to play out, and that way we can respond, so forth. They've evolved a bit from that strategy. They now have some dedicated electric vehicles. There was one out, the version of the X3 SUV that came out, I think, the end of last year. This fall, they're launching the i4 sedan, which is a roughly 3 Series sized fully electric sedan, and also an iX, which is a roughly, I think it's the size of the X5, give or take, an electric SUV in any event. Those are coming, I think, both this fall. And then, there are more coming next year. BMW is saying that they're going to show more of their plan next month at the auto show in Munich, assuming it happens amid COVID. But one way or another, I expect BMW to make a presentation, even if it's by webcast, talking about what they're going to do a little longer term. And I think that will be very interesting to watch.
Yeah, so in BMW operating in this European market, you kind of have to put some chips down on EV, or you'll start getting slapped with fines, which maybe explains that change in path from management. So we've talked about Ford, GM, BMW. Are there any other auto stories out there that maybe aren't among these names that folks are following every day that you think should be on investors' radar?
Well, let's talk about Ferrari, Nick. Ferrari reported this week. And Ferrari is interesting because it's kind of an automaker and it's also kind of a luxury company. I mean, in a sense, really, its best comps are companies like LVMH, Hermès, and so forth, companies like that. In terms of profitability and margin, I mean, these are very high-priced cars. They limit supply to ensure the exclusivity and so forth. They only build about 10,000 cars a year, and even that's up from 8,000 a few years ago, but that's sort of accommodating the Chinese market as it has matured and so forth. Ferrari had terrific profitability in Q2. We get excited when GM reports 12% EBIT margin, when BMW reports a 10-12% EBIT margin. Ferrari's was 26.5%, which is, we're accustomed to seeing Ferrari 22-24% range. As I said, this is a luxury company. 26.5 is a good quarter even for Ferrari. But the story isn't about chips. I mean, they're not dealing with, you go to the Lamborghini dealer and they're fresh out, so you got to go buy a Ferrari. That's not how it works. All these cars are built to order, and they're getting enough chips. When you build 10,000 vehicles a year, you're not having trouble getting chips. The story here is they have a new model, and it's a hybrid. This car is called the SF90 Stradale. Normally, when we talk about Ferrari, we talk about the ratio of V8 powered models to V12 powered models. When we look at their profitability from an analytical viewpoint, the V12 powered models are more expensive, they're more exclusive, they have fatter margins and so forth. So we look at that mix every quarter. The SF90 Stradale is actually a V8 model, but it's a hybrid, and it's priced and positioned like a 12-cylinder model, which if you're deep into Ferrari, this is really interesting. Anyway, the price tag, this car starts at $625,000. It is the first Ferrari hybrid that isn't an exclusive limited edition where you have to be invited to buy one. Theoretically, anybody can walk into a Ferrari dealer and order one if you have the means, as they say, you know. and from the reviews, I highly recommend picking one up. You know, this is 1,000 horsepower cars that's getting rave reviews from all of the car magazines and so forth. It's what their Formula One drivers drive. They did a whole video of it, of their Formula One drivers, Carlos Sainz and Charles Leclerc, out on a track, you know, playing with these things and so forth. And they were both like, whoa, you know, these are young guys. They get to drive this car. Like, oh yeah, wow, this is great. What happened in the second quarter is they started shipping this very high priced new model with great margins, for which there has been considerable early demand among their extremely well-heeled client base. So it was able to record the revenue, and that pushed their margins way up. They too warn that margins will moderate somewhat in the second half of the year because the next new models to come out are V8s. And that's going to make up a disproportionate share as they ship. It's a revised version of their Portofino convertible and the Ferrari Roma, which is a new product for them. It's a sleek, smooth, what they call a Gran Turismo, a GT, kind of more of a cruiser than a track car. And there's been very good demand for it in China. Some interesting notes about Ferrari. They took a record number of orders in June, record month for them in terms of new orders. Their order book now stretches well into next year. And acting CEO John Elkann also noted that they're seeing more and more women buy Ferraris. In China, it's 1 in 5 of their buyers are women. And this is very interesting to them. They are noting a positive response, more women coming, particularly with the Roma, the car we just talked about, and that's a good trend for them in terms of, you know, their longer term order book and so forth. So it's a little business. I know not a lot of people follow it, but I mean, it's Ferrari. It's cool. I'm a car guy. And it's an extremely profitable, successful little business.
Yeah, well, so I'll give you kind of 3 maybe bullet points to pull out of there. So number 1, this SF90 Stradale, $625,000 price tag. We just saw the, you know, Bezos and Branson go to space. You can get a ticket to space with Virgin Galactic for $250,000. So it's literally cheaper to go to space than it is to get this car. Number 1. Number 2, we are in this world of hyper performance vehicles now are hybrid. Like hybrids are, you can get better performance out of a hybrid than you can get out of a traditional vehicle. You see the Formula One cars are hybrid today. So this is a development of it's not just like, oh, you want to save the environment, drive your Prius. If you want to have the absolute pinnacle of performance, a hybrid it can help deliver that for you today. And then also just how many rich people are there out there? It's incredible that there's this many people out there buying these cars on a yearly basis. And Ferrari, if you look at the market cap, I mean, this is a big company, right? I mean, when you look at the size of the business,
it's a company with like 3,000 employees or something. I mean, Ferrari is a lot smaller than people think it is as an actual company. You know, it's one factory plus a little body plant, like 20 miles away, and their Formula One team. And you know, they're doing very well, thank you.
Yeah, so just look it up. Market cap over 40 billion. So this tiny little company, they're doing very well. I hope I have the opportunity to pick up an SF90 Stradale. I don't think it's particularly likely, but Ferrari, if you're listening and you want to take me and John out for a test drive, we will take you up on that. But until then, John, always love having you on the podcast. As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against the stocks discussed, so don't buy or sell anything based solely on what you hear. Thanks to Tim Sparks for mixing the show. For John Rosevear, I'm Nick Sciple. Thanks for listening, and Fool on.